Jose, great to have you on the program. Thank you so much for taking the time to join us. And you join us at a really critical time in China-Mexico, U.S.-Mexico relations. So great to speak with you.
Same. Thank you. Thank you for the time.
Well, Mexico is in this unenviable position where it is squeezed between its two largest trading partners. To the north, you've got the United States that is putting enormous pressure on President Claudia Sheinbaum in terms of auto tariffs and all of the other tariffs that Donald Trump has imposed and then relaxed and then imposed and then relaxed. We don't know where we are. And at the same time, the U.S. is putting pressure on Mexico to add tariffs to all of its trade with China so that China cannot use Mexico as a backdoor into the U.S. economy. What is the situation today, I mean, just more broadly, in terms of the position that Mexico's facing in between the U.S. and China?
Well, I think we are focusing as a country on really understanding what Trump wants. And I think it's the main politics of migration and on drug related problems. So that's what the President Sheinbaum is offering. I believe that the tariffs they want them to impose to China, they're not that important for him. Like it's just political. Like if you see
they
the
are
tariffs,
important to Mexico, though. That would be bad for Mexico, right?
Yeah, right.
If everything coming from China had to have a tariff, that could be problematic.
Yeah, because it's our first or main social commercial partner against our second best. So you lose both ways. So I think what President Sheinbaum is doing is really, it's good, well handled, because it's like lay low. Just don't say anything. Just wait and see what will happen. And that's the politics she has been taking. Besides, like, for example, Canada, that they said our relationship is over, or what?
Yeah.
Europe, they are being more confrontative. I don't know. They're fighting more.
Claudia Sheinbaum, in many respects, is writing a masterclass now on how to deal with Donald Trump, at least so far. Again, we're very early on in this process. We're only a few months into the Trump presidency, so it may be premature to say that she has somehow succeeded where others have failed, because we have to see how this all plays out. One of the interesting things, though, is that up until the past few months, Chinese investment was flowing into Mexico at a rate that was really quite dramatic. And it's interesting because you can compare Mexico and Vietnam are very similar. A lot of outbound investment from China came to Vietnam, and you could look at these charts that showed how much new investment from China was coming into Vietnam and how much outbound trade from Vietnam was going to the United States. Those charts were almost in parallel with one another, indicating that a lot of outsourcing was happening to these third countries. Mexico was another one where there was a surge of Chinese FDI, in part because they wanted to take advantage of the free trade agreement. That now all seems to be potentially in jeopardy if the United States follows through on some of its threats to Mexico to crack down on Chinese products coming in from Mexico into the U.S. Are there concerns in Mexico about the pace of FDI from China slowing dramatically now?
Yes. Again, the auto parts or industry here in Mexico is really important, really, really important. And the flow of brands coming from China the last 10 years has been amazing. Like, there was no presence from China here in Mexico, and now they have 20% of the market, like in 5 years. It was impressive. Like BYD, they came, they control the electric car business in Mexico. And now it's like they don't really know what's going to happen, if they will continue. Like there were plans of building Chinese cars in Mexico. They have stopped that plans. Also, like electric parks and all that kind of investments that will be taking place here in Mexico. So they have stopped uh,
Yeah,
momentarily to.
part of the reason that they stopped, and one of the arguments that they gave, according to the Financial Times, was that they didn't want some of the technologies in the BYD plant in Mexico to fall into U.S. hands. That was part of the rationale. My guess is it probably had more to do with the uncertainty about whether or not that BYD plant could eventually be used to sell cars into the U.S. It just felt like there was too many car factories coming from China into Mexico to supply the Mexican market or even the Central American market. And so one always had to suspect that all of these Chinese auto investments were going to eventually be in the hope that they could actually sell into the US market, even though neither Biden nor Trump was going to ever make that possible. But nonetheless, you see on the streets of Mexico City and you see on the streets of Guadalajara more Chinese cars. And so the domestic Mexican market is still a pretty sizable market that could nonetheless appeal to Chinese brands.
Yeah, definitely. And for example, I'm right now visiting Colombia. I'm in Bogota right now,
Mhm.
and it's the same case. The Chinese brands are controlling the market, especially in electric cars. For example,
Yeah.
BYD, the arrival of BYD to Mexico, they push to the other brands to downgrade their prices because they were being too expensive, especially for Japanese and Korean cars. They were the one that used to control the market in Mexico. Honda, Kia, Nissan, they were the big brands. Now with the Chinese brands, they have to retail on the prices and like start thinking their strategy better.
Yeah, I'm glad that you're in Colombia and we can talk again about more broadly about the Americas. China, Latin and South America and the Caribbean trading relationship has been really just a steady line up over the past 10 years, especially with countries like Brazil. Are you talking to your clients more and more about what the future of China South American trade looks like? Do we see more upswing because the Chinese want to reduce their buying of say U.S. agriculture to shift that into South America? They want to find new markets for cars that they can't sell into the U.S. Does that factor into some of your discussions?
Uh, Definitely, the conversation has changed. Um, Normally, people saw products from China as something cheap, as something that will last few time. But right now, they have understand that China has changed. The products from China has changed. They are quality products, cheaper products, and they are starting to get really interested in buying things from China. Like it's not the same like before. I remember 20 years ago there were some cars from China. They were garbage. They were disposable, and right now, and people have the idea that China products are really cheap quality, but right now they are starting to understand that China can develop really big technology and they can bring important things. These things doesn't necessarily have to come from US. So
Yeah.
that's something that has changed.
Well, Jose, I'm thrilled to be able to have the chance to broaden our conversation by inviting into our discussion your colleague David Barrett, who is CEO of EBC Financial Group UK, and thrilled to be able to welcome you to the conversation, David. We've been talking about the China-South America relationship and the uncertainty that we're facing right now in the context of the tariffs and the disruption that's been caused by the Trump administration. When you talk to your clients and they ask you, they say, David, Jose, what do we do right now when we see the uncertainty that's out there in the market? Is this a time to invest? Is this a time to take some chances and some risks? And so when we've been talking about China, Latin America, but more globally, what is the vibe that you're sharing with your clients about this moment that we're in terms of global trade?
I think for me, I'm constantly amazed at how strong an opinion everybody has about what's going to happen. really don't understand how you can have a strong conviction. I really don't. I mean, even with today, I would almost guarantee you whatever we get from the Trump administration this afternoon, within 1 week, some of it would have changed. And people's opinion of what the action, reaction, and consequences of what's going on will have changed as well, because everything is so fluid at the moment. So for me, there are many, many trading opportunities out there. We're seeing clients that are engaging with the volatility, but I think that they have to be realistic about how predictable that volatility is and why it's there. So for me, I see clients taking advantage of trading opportunities. Our volumes have been very, very high for the last 2 or 3 weeks with the increase in volatility coming along. And I would say that that's really not necessarily people having a strong view and trading bigger positions. It's people taking advantage of the intraday volatility. I don't think anybody should have the strong conviction, because I'm absolutely convinced that nobody's got a clue where we go.
Yeah. And so I should note that we are recording this on the eve of Donald Trump introducing global tariffs to what he calls Liberation Day in the United States, where he is going to put reciprocal tariffs on pretty much every country around the world that trades with the United States. And so at the time of this recording, we don't know how the market is going to respond. But I think, as David's pointed out, it doesn't really matter if we're recording this on a Tuesday, a Thursday, a Saturday. We're going to see change. And so I think it's just trying to get a grasp mentally on how do we adapt to this, because we've got 3 3/4 years left of this at least. I mean, Donald Trump is even talking about going into a third term.
I would say you've got less than 2 years of this, because I think if you look at what's going on and the uncertainty that it brings, the midterms have the ability to change the footprint of the administration yet again. So yes. I can't even see towards the end of this week, let alone the end of the month, the end of the quarter, the end of the year, or the end of the administration. I think it is just way too unpredictable. I really do.
So let's talk about China a little bit, because China is a variable in all of this, and it's a key theme of Donald Trump's agenda, particularly on trade. And so we've been talking a lot about what's happening in Latin and South America, in terms of Central and South America, in terms of the uncertainty that's come into the market. When your clients are asking you about the U.S.-China trade relationship, the China-Global South trade relationship, where do you come down on that?
I think China's actually playing a pretty tight game at the moment. I think they're allowing the noise to happen around them. If you notice, they've made very few public comments from the hierarchy in China about their reaction to the tariffs, or what they may do or what they may not do. I think they have one massive advantage. They don't have an electoral cycle to play to. So they can afford to take a step back, and they can afford to take a more macro view. The thing about China is, I think that as soon as DeepSeek arrived, you can kind of look at the timing of DeepSeek and how it happened and when it happened. But the reality is that China is an economy, and it is a political establishment that's very, very long term. So I would suggest that if you look at how China's playing the game now, they're probably doing the right thing for them. They have a massively undervalued market. They have huge structural problems. There's no doubt about it. Until they manage to get their consumer up and running and get that consumption demand firing off again, really they have a real problem moving their economy forward. But just by taking advantage of things like the market's reaction to DeepSeek, for example, China tech has gone up a lot, and it's dragged a lot of the other sectors up with it. So in this market, China has two big advantages. One, it doesn't have to play to the same timetable. And two, in a global sense, its assets are relatively cheap compared to a lot of other sectors. So what we've seen clients that are not necessarily exiting the market per se, but they're looking to rotate out. So Europe's clearly done well. I mean, you only have to look at European defense stocks and the way that they've traded over the last few weeks or so. But China tech and some of the other businesses around it have picked up enormously as well. And there's no doubt that there's been rotation. I think if you look over the last couple of weeks, Leverage has definitely been reduced. So the volatility we'd seen over the last 2 weeks, particularly in stocks, has taken a lot of the leverage guys out. Retail is still a buyer on any dips with both hands. CTAs were very long as stocks, come out and are probably slightly long now. But I think real money's probably done absolutely nothing. It hasn't moved enough for them to have to do anything. So I think,
Yeah.
in terms of what comes next, I think that leverage reallocation is probably the thing to look for, because you're probably going to need to see another 10% down on stocks in general before the real money even wake up, right?
Right. Jose, let's pick up that conversation about what comes next. One of the things that surprised me over the past 3 months is how quickly the rest of the world is reconfiguring to reduce their dependence on the United States. Whether they can do it in the short term or it's something they're just planning to do now for the long term. But you saw in Colombia, just days after they had that confrontation between President Trump and the Colombian government over the flights back to Colombia with immigrants. Just 1 or 2 days later, Colombia announces a new trade route with China, a new shipping route, a port that opened up. We're seeing now the port of Chancay, the volumes are going up in Peru. And there is a growing demand for trade with China, potentially to offset what they might lose from the United States. Tell me a little bit about what you're seeing on the ground in terms of this reconfiguration or the new thinking maybe that's happening across Latin America and the Caribbean in terms of leaning more on trade with China as a way to offset some of the risk with the U.S.
Well, common people, like, they are starting to get really interested in China. For example, I had a conversation with the owner of a bank yesterday. Um, they told me about our opinion on China, and I showed him pictures of Shenzhen. He didn't even knew that Shenzhen
About
existed.
Shenzhen. He'd never heard of
Uh,
Shenzhen. He'd never seen it before.
yeah.
And I can tell you, the first time I went to Shenzhen, it truly was a fishing village. I mean, there was nothing there in the
Mhm.
early 90s when I went there the first time. So if you imagine what Shenzhen has gone from in the early 90s to today, it's just mind blowing.
And that's exactly my example when they ask me, "What do you think about China?" And I show them pictures of Shenzhen. Like, you tell me, look what they have done in 20 years. So the development they have, it's amazing. The power, the strength they have to work, it's really, really amazing. And so if you have to rely on China to take place over what US is leaving behind, you should really be calm, because the internal, like David said, the internal business from China, it's sim- it's amazing. They are 1 billion Chinese people, so they are ready. I think they are ready to take place.
Yeah, but there's a little bit of a risk here because, and we've seen more governments, Mexico, Chile, Brazil, put sanctions or tariffs on Chinese steel products. And there's concern about Chinese e-commerce goods that are coming in so cheap from Temu and Shein
Timur,
into these markets that could displace local producers and really cause quite a bit of disruption in the local economy. Are you picking up on that anxiety as well, that they're potentially more discriminating about what Chinese products should be let in and what maybe would be best not let in, or at least tariffed?
it's complicated.
Yeah.
Timo and Shine, they were a bomb in Mexico. Everybody was consuming. Everybody. AliExpress also. It was amazing because the prices, they were amazing. They have been in Mexico. Timo and Shane, they get tariffs before Trump because of this, because local people, local manufacturer, they were complaining about the prices because they were left out of the conversation. So Timo and Shane, they got, I believe, 16% of tariff in Mexico. That was before Trump. So yeah, definitely the government is concerned about how cheap these things can get, and how this will affect the local products. So
Yeah.
but it's complicated. It's really almost
Yeah.
impossible to fight with because they were
No.
really, really cheap.
I mean, David, this brings up an interesting point is that, the Chinese character for crisis, 危机, is danger and opportunity. So these moments here, and especially, there's always going to be buyers and sellers, right? And so when you look at the landscape that we're in today and where we are and the unpredictability that you talked about, who are some of the winners and losers sectors wise that you think people should be keeping an eye on, particularly as it relates to some of the categories that Jose's been talking about in terms of e-commerce, automotives, technology, things where the Chinese are particularly strong?
Well, I think just to take a step back and follow up a little bit from what you were saying before, I think if you look at what we're seeing at the moment, we are seeing a disruption to what we've got used to in terms of globalized trade, right? So people are having to second think the way that they have set up and established their entire global network of trade, whether that's countries or companies within those countries. So what's going on in America, the potential real downside I feel for America is that they become disenfranchised from a bigger part of that conversation because they're trying to isolate themselves, right? So China is the classic example, as Jose said, that they're big, they're powerful, incredibly malleable, so they can make their presence felt in places very quickly and very substantially. I think in terms of sectors that benefit, again, I genuinely believe that you need to keep a very open mind because you don't know how it's going to evolve. I think the main point to take from this is that everything that we've considered to be normal and the way that things are managed, relationships, trade blocks, their interaction with each other, all of that is up for play. If you live in Europe, Europe is the best can-kicking organization that I've ever seen in my life, right? They can get to the last minute of the last hour of the last day of a crisis and come up with a way of solving it, but not solving anything. So
we might be at the end of that road where that cans are piling up right now.
Exactly my point. So for Europe, and it's such a massive if, but if they can get themselves together and they can mobilize what the world needs, which is quality, high influence, high quality construction and manufacturing, which is what Europe does. So if you look at the relationship between Europe and the US's trade balance is only slightly less than what the Europeans give to the US, but the Europeans give them quality manufactured goods. Everything that comes the other way is services. So let's just say Europe turns off for services as a retaliation to the tariffs. They put that manufacturing expertise into not only their own economic requirements, but also into the military buildup that they seem to be coming towards going. There is a scenario where you could easily see the EU usurping the US in terms of its position as an economic bloc in the world. And that means that they're going to have to forge new relationships and new trading blocks with people that maybe before they may have chosen not to. So for me, the biggest potential problem for Trump and America and the biggest potential win for Europe is that Europe actually does stop kicking the can and does finally do what it should do, right?
Well, I had a conversation with a senior British official, and I asked him, I said, do you envision in 4 or 5 years maybe that Britain will be back again as part of the European Union? And he was definitive in saying, absolutely. That maybe it won't be a full membership. It might be like right. Norway or Sweden.
Yeah.
It might be a partial membership, but the world has changed now. And there's a sobriety in the UK now among the electorate that says being alone in this very, very contentious world is not a good place to be when you're out by yourself. And so it's really exciting in one sense, and Jose, this is what we were just talking about in terms of envisioning a very different world.
Yeah.
Where, and out here in Asia, there were conversations that started that Japan, South Korea, and China were going to start, talking to each other. Again, we've got to go baby steps here, just like with UK and Europe, but going baby steps here that, new configurations are going to form that we never thought possible.
And this is my point.
And that's exciting right now. And as an investor, that presents huge opportunities.
100%. But I do think that the way that will form and how it will look is still very much in the flux. So
that's right.
What you need to do is you need to be prepared, one, to think about things in a different way, two, not to be too committed at too early a stage so that you've got powder that's dry so that you can deploy your investment capital in a sensible way. And I think three, you just can't rely on all of the old norms that we thought were the rules, because those rules don't exist at the moment. They're being changed, right?
Yeah. Jose, let's wrap up our conversation again, picking up on what David was talking about in terms of how do we envision this new world that we're going into, or maybe that we're already in. When you're talking to your partners, your clients, companies in the region, what are you telling them about the future and what they should do in terms of how they should manage their investments and think about what the opportunities and what the risks are, given the uncertainties that we're facing?
This is a conversation that has changed since the pandemic. For example, we've talked about numbers and data that came out that normally were important. Like, for example, labor data in the United States. That's something that used to move the market a lot. But right now, that's data, it's just not reliable enough. It came too late, and you have to change how you see things. Like, for example, when the Fed announces hiking or something, normally before that information were immediate. The market changed immediately. Now it can take up to 2 or 3 days to really understand how the markets take the news. The volatility can last 2-3 days. They can go up and down 4% and return to the same point. So I think people should take things easily, like David says. I think people overreact immediately, and then they take time to understand what really happens. So what I said normally is avoid trading the news, because it can go both ways. Just wait and see. Wait 2-3 days, and then the market will return to the original place. So that's something you have to do right now.
You'll be a fool if you try and time the market, right? I mean, that's, you'll be a fool. David, I'm going to give you the last word. What do you think? Again, just a few pearls of wisdom from your vantage point in the corner office as you look out onto, the next quarter, and just what should people be thinking about?
For me, I think, as you said several times in this conversation, there is going to be enormous opportunity coming up. So every time we see a schism in the normality of the way that the world functions, many, many things will move. There will be lots of opportunity. So I really think, listening to what Jose was saying and what you were saying earlier, the most important thing is to be in a position to be able to take advantage of it. So I really think that people need to be patient. They need to be open-minded about what's going on and think about what they're doing, because over the next 2, 3, 4 quarters, I think we're going to see some enormous changes and some enormous opportunity.
Well, great. Well, thank you both for taking the time today to help us understand what's going on. I'm looking forward to checking back in with you in a few months to get your predictions on what we got right and what we got wrong. And again, this is just an exciting time, if not terrifying time, to be alive. So David and Jose, thank you both for your time today. Really appreciate it.
Thank you.